Hello dear traders, I'm Anna Kasatkina. Welcome to Insta TV. Today's trading session started out with the US dollar making a slight upswing in an attempt to par earlier losses seen in the last few days. However, the greenback failed to strengthen versus its Australian counterpart. The Aussie attracted a fair amount of bullish interest after a batch of upbeat data from the Australian labour market released earlier in the day. Following these encouraging reports, the Australian currency surged by 100 pips against the US dollar, landing at 0.7320. By the time the European session opened, the price corrected lower to the level of 0.7280. Technical indicators suggest that the Australian dollar is likely to retain its upside bias and break above resistance at 0.7380. If it does, then the pair is expected to move upwards, targeting 0.75 and even 0.76. What fueled such optimism on the side of investors? The recent data confirmed that experts from the Australian Bureau of Statistics actually turned out to be right in their optimistic employment estimates published last month, while skeptics who had doubts about the reliability of the robust jobs report were mistaken. A sharp upturn in the number of new jobs created in October proved out to be true. The positive tendency persisted in the following month as well. In November, 71,400 Australians were hired. Earlier, most market analysts tracking the situation on the Australian labour market had predicted a drop by 10,000 jobs and expected the November figures, calculated by Australian statisticians, to be revised downwards. However, it did not happen. Meanwhile, the proportion of jobless working-age Australians declined to 5.8% over the past month, instead of climbing to 6% as some pessimistic market projections suggested. The New Zealand dollar also posted solid gains versus the American currency, as the pair recovered by more than 3%. The Kiwi jumped above the 0.6780 mark. The reason why New Zealand's national currency is currently on the rise lies in the considerable shift in the central bank's monetary stance. Following the recent policy meeting, the Reserve Bank of New Zealand issued a statement saying that the regulator decided to cut its key interest rate from 2.75 to 2.5%. This move was rather predictable. However, the comments that followed came as a surprise to traders. In the press conference after the meeting, bank representatives said that the New Zealand economy did not need any more reductions in interest rates. This was Daily Financial News on Insta TV. Thank you and goodbye.